Risk appetite has certainly returned. Last week we did see the Nasdaq's longest losing streak since 2022, which just shows how quickly momentum can wobble. But the broader trend is clear. Investors are leaning back into equities, even in lower quality parts of the market. High yield spreads remain tight, and we have a VIX that's trading round about 16. And so that combination, risky assets leading and volatility staying low, tells us that investors are willing to take on more risk. But it's worth asking, how much of this is optimism and how much is justified by fundamentals? Well, a lot of it really comes down to liquidity and narrative. We mustn't forget, there's still close to $7 trillion sitting in US money market funds, which is a big cushion for risk assets. There's also AI and productivity gains, which have become central to the whole growth story. Data center construction is up 400% since 2022, and power demand from those centers is expected to double by 2030. So that's real investment and a genuine shift. But we also can't ignore underlying fundamentals. The forward PE on the S&P 500 is now above 20, which means a lot of good news is already priced in. Well, three things. First, earnings. 2026 forecasts assume faster revenue growth and more than 100 basis points of margin expansion. And that's a tall order in a US economy that is decelerating. Second, tariffs. The US have raised about $28 billion in tariff revenue in July 25 alone, and that's triple the level a year ago. And so far, companies have absorbed those costs. But as more of those costs are passed on to consumers, that could begin to exert pressure on demand. And third, global divergence. You've got China rallying on policy support, while Japan and Europe are wrestling with trade and fiscal headwinds. And these are the cross currents that will set the tone for the markets into the rest of the year. Well, it certainly means that markets are priced for resilience, and that leaves very little margin for error. Optimism can keep prices supported, but it also raises the bar for earnings, for policy and growth to actually deliver. And so for investors, it's a reminder not to get complacent.